Good afternoon, everybody, and welcome to today's afternoon video. Luckily, I feel a lot better today. I'm getting over my flu little by little, and so I'm able to post a video today. Today was a very good day in the market, so if you're a bull, congratulations, you made a lot of money. And if you're a bear, hopefully you got stopped out. If you didn't, you lost a lot of money. And that's essentially the rule of the game. You either, like I said, you either do or you don't. And today was a positive day. So if we go into the intraday on the SPY, what happened? We had a gap up, very strong, okay? And then after that, some distribution, some selling, again, some fear coming into the markets, understandably so because of these volatile markets that we've been having. However, a lot of support here, a lot of moving averages on the 10-minute chart, especially the 200, very strong support. Also had that gap fill right here, and then it was off to the races, putting in about 7 candles. We came into this little bit of resistance right here, okay, this little pivot point. We based sideways for a little bit. Again, bullish consolidation. Bounced off of that moving average, and that was momentum enough to take us back up into the end of day. We did have a little bit of end of day selling, again, because we were coming into another pivot point. So the market's very simple to read today, very predictable. If you were just using classical technical analysis, it was a very good day to make some profits. I will emphasize that there are some signs in terms of this, at least this intraday chart. For example, notice how whenever you went up, that last candle was a strong move through some sort of resistance level. So notice how we had that here, okay? So that is a very bullish sign to have these smaller candles and then finally have a final surge candle, and that's probably why you didn't sell off here, but rather you based sideways, and then you had another move, very strong candle. Again, notice the uptick in volume on some of these candles. So all of this very bullish. We had finally we had people back in the markets. And if you go back to my video from yesterday, there are some points that I mentioned. And again, these are all clues that reveal to us today that we might see some upside. Again, that's what you have to do when you are trading. You have to do a little bit of detective work. You have to put things together, and then finally you have your puzzle, so to speak, that you can put together. And so we are developing a story which changes every day. However, this changing story is the story that also changes our profits every day. When we tell the story right, we make money, and when we make mistakes in the story, then we lose money. And that's all it is. It's all about research. Trading is 90% research and 10% sitting in front of the computer and actually executing the trades. Now, going back to the daily on the SPY. So overall, very strong day on the intraday. We are into a little bit of resistance as of now into late day. And we have to see tomorrow what happens. And nonetheless, very strong move. However, on the daily, even though there was a lot of enthusiasm out there in social media today, even though, yes, I acknowledge there has been a lot of that, we still have to read the charts and be realistic. What we're seeing here is a good green candle, okay, with a long wick to the downside, meaning that the bulls had control today, especially into the end of the day. So very impressive. However, this candle still has not closed above this candle right here from 2 days ago, which, by the way, had more volume. So what we need to do is we need to see a close. In other words, on any given day this week, if the SPY closes at 4 p.m. above 207.24, then that will be a very strong signal for the bulls, okay, to go further. Because quite frankly, this could also go down, right? So as a bull, if you want to hold your position, what you want to see is you want to see the SPY close above the 207.24 level. We are above that resistance line right here, So we've been trading above it, but we still have not confirmed it. We will do that if we close above 207.24. And again, the chance goes up more as we base more sideways. So if you have more days where you have more dojis or you don't sell off too much, then again, you're adding on to the bullish story. And of course, you can also sell off. But at that point, even if you sell off, as long as you don't take out, and again, this is all on a closing basis, as long as you don't take out this purple trend line, and even then, as long as you don't take out this wedge formation, you are still in bullish territory. Okay, so let's make that clear. For now, I'm a lot more bullish than yesterday. Yesterday I was about to 70% bullish. Now I must say that that percentage has increased. We do need to see follow through. Again, 207.24. Now yesterday I also talked about some other factors that were giving us clues as to what was going on in the markets. So one thing I want to talk about are these Friday sell-offs. So I believe we've had about three Friday sell-offs in recent weeks. And again, that is its own chapter in our story. The first sell-off on Friday was extremely volatile. Seemed like everybody was trying to get out of the market. And that is when we had these wide range bars. Second one, okay, we had some selling, but that selling was getting smaller and smaller. And then last Friday, we did have that Friday afternoon selling that I talked about in that morning report, but it was a lot more subdued. So it seems that volatility is subsiding again. It probably is based on the situation in Greece, but as a technical trader, you also have to say that it is because of these charts. And so in order to actually fulfill this pattern that we have been seeing, this bullish wedge pattern, you do need to see a decrease in volatility, because how are you going to create that narrowing wedge? You're going to create it by decreasing volatility. In other words, the swings have to be smaller and smaller. And so far, that requirement is being fulfilled. And so far, we have to remain on the bullish side. We have broken above the upper level of that wedge. However, we need to confirm. And as long as we confirm above it, then it is very, very possible that we go to all-time highs. And as I said on the S&P cash, it's even possible to go to the 2100 to 2200 area. I believe 2140, if I'm not mistaken, was the level I calculated. So that's what we have as of now. Another thing I want to revisit some of the things I talked about in yesterday's video. Let's go back to bonds. And I want to go to the 20-year, the TLT. And so when we compared, again, this is in yesterday's video, so we didn't have today's candle. When we compared bonds, at least those 2 days prior to that, versus the SPY, we noticed that for the first time in at least a year, we had 2 consecutive days of bonds being down and 2 consecutive days of markets being down. And overall, that just meant that money was coming out of the markets. We are so used to money coming into the markets, and what we've been seeing recently is money coming out of the markets. Now, usually that would mean volatility, right? That would mean fear. But again, when you also have money coming out of bonds, that just begs the question, well, where is it going, right? And so, in other words, the way I interpreted that is that we had people who wanted to sit on the sidelines. So we did have some distribution by these big players out there, but I think increasingly what we've been seeing is more and more money being put on the sidelines, because we didn't really have a definitive direction. And so there were neither buyers in bonds nor buyers in equities. And that was really one interesting thing. And then when you think about it, well, when the market puts in a definitive direction, whether bullish or bearish, then there would be this liquidity, right? This cash to be put into the markets. And so I think just based on this, based on bonds being down in these 2 days, and again, today is the third day, but specifically here, both bonds and equities being down, What that means to me is that when the market actually catches a bid or sells off, we still don't know which one's going to happen. It's going to happen very fast because of all this cash that's out there. And so if we end up selling, there's going to be a lot of investments going into bonds, and so bonds can shoot up. If we end up with more upside, that upside in the equities is going to go very high because we're going to have these buyers that want to participate in the markets. And that's my theory. So I don't know if it's going to be correct or not, but based on this, I think there's a lot of cash in the on the sidelines waiting to be invested based on whether or not we break out to the bullish or bearish side. I also talked about the VXX yesterday. So yesterday was a down day across the board. We had a lot of selling, but the VXX was up only 0.5%. And of course, most of you know that the VXX tends to trade, now not always, but it tends to trade inverse to the markets. Now it does follow the futures, and it's based on a 30-day rolling average, so it's a complicated mess. I don't want to go into that. But what we're seeing is that the VXX was up only 0.5%. So yes, it was inverse to the markets, but percentage-wise, it was not a good number. So on a down day that is only 0.8%, the VXX would be up probably about 2% plus easily. But what we did see yesterday is that people just weren't putting money into the VXX. And so in other words, they were putting their money was on the sidelines, and they did not want to put it in the VXX either. Therefore, I don't know if they thought that maybe the situation in Greece would be resolved or not, but the charts were telling us that people just weren't putting money in on volatility either. And again, just putting the story together. And so when finally we do break up to the upside, which is what I believe, there will be a lot of money out there that can be invested. And so I'm expecting a lot of momentum when that happens. Now, there are, of course, some bearish signs, so nothing is 100%. So just by looking at the TLT, you will notice we are into some support here. Again, we have a 50 MA on the daily. We do have a little bit of support based on this area right here, and also based on the indicators showing us that there might be a reversal to the upside. So we'll see how that plays out. Now, it is also possible that the market may have to trade sideways for a little bit, but then we would see that breakout. Either way, I'm seeing just based on that there would be a breakout. And again, if you go back to the intraday, you notice that there was a lot of a buying frenzy out there, right? We had two big up moves in the S&P, and I'm sure in the other sectors as well. Now, speaking of the other sectors, there were some that were very strong today. Of course, oil weak again, nothing new there. It came into a little bit of resistance, and then it's been selling off since then. I think oil is not really a problem for the markets as long as crude doesn't take out the recent low that it put in about a week or two ago, whenever that was. I think the market is just not going to think about it. There's this consensus that oil is going to go down lower. So we'll see what happens, but I think as long as we stay in this range, even if we sell off or go up in these big percentage moves, the market is really not going to care. And the reason for that is just we have a lot of rotation going on. So we've, and I'll be honest with you, this wedge formation that you see is nothing but distribution and accumulation. And that's what it is. It's a rotation that's going on. These big funds are taking their money out of things that they anticipate are not going to go up, and they're putting it into things that are seasonally going to become bullish. And that's why you have these big moves in oil. That's why today you had a very strong move in the tech sector. Look at Apple. Apple was up almost 2% today, and it just keeps ripping it up as far as all-time highs. And so we'll see. Apple will probably be the leader for the Nasdaq to new all-time highs. And the other tech companies weren't too shabby either. You had Google having a very strong day. You had Intel being up over 2%. So a lot of strength in the tech sector. I've been talking about the home builders, how in some of the flat days they've outperformed, and lo and behold, today home builders had a really good moves. Most of them up at least 1.7%. Now, of course, commodities continue to sell, and nothing new there. And we have to assume that they're going to keep selling unless proven otherwise. And of course, a lot of that has to do with the dollar. Now, let's look at the dollar. I usually don't really present this to you, and I don't know why, which I should. Let's look at the UUP, which represents the dollar. Now, the UUP has been on a tear. And of course, it's been both a positive and a negative. It's been a negative for earnings. So we've had a very choppy earnings season, but of course it's a positive because it's sort of the only safe haven now for these other countries that keep playing with their currencies, for lack of a better word. We are into a little bit of resistance right here towards the 25.83 level. So keep that in mind. The dollar does have some resistance, but overall it's holding up very well. I mean, it was really difficult to call a top in the dollar, and the reason again are all these geopolitical issues. So you're really not going to see the dollar selling off. So if you're trying to call the top in the dollar, I advise not to. I mean, this situation is going to keep going for years, especially now that these countries are just announcing these QE programs. So a lot of these things with currencies are just beginning, and this that this and whatever has been going on with the dollar is going to keep going on. In other words, foreign money is going to be coming into the dollar, and as long as the dollar stays strong, commodities are going to stay low, namely oil, and oil cannot catch a bid as long as the dollar stays up, and that's the bottom line. You know, you can't expect oil to go up to $70 if the dollar keeps trading where it is trading. Now, the dollar has been in a range. It's still holding up steady, has a ton of momentum. However, seems to be decreasing a little bit, and it is overbought. But it is trading in a range, and I want to go back to the weekly to explain why it is trading in a range. There's actually a technical reason for that. Let me fix my chart. So what you want to do first is put together these two lines. I almost had the lines wrong. So here is a trend line right here that is some resistance, these two pivot points. But there's also another trend line, an upsloping trend line right here. So if you put that together and you go back to the daily, you will notice that the dollar is trading in a range because it's in between support and resistance. So it did come into this resistance right here with that upper trend line, sold back a little bit, came back up, sold again. So it's in this range. So as long as the dollar holds in this range, there's nothing wrong with it. Now granted, it might need a pullback, but that pullback is not going to be not going to go very far. So you might have some adjustments based on seasonality in terms of what's going on in the stock market. So of course the dollar will adjust based on that. But overall, if you look at it in a longer term scale, based on all of this that's going on in the world, the dollar is going to stay up. Okay, so keep that in mind. Now don't buy the dollar. I'm not telling you to buy the dollar. You don't want to pay up for it now. But if there is a pullback, for example, if we have a correction in the market, which might happen in I believe March or April, based on my preliminary research, then it might be very wise to pick up a little bit with the dollar. Now let's go to gold. So let's look at the GLD. a little bit slow today. So again, nothing strong on the GLD, and I've been talking about this for over a week. If you look at that Commitment of Traders report, the commercials are short, like they haven't been in a year. And that should have been a signal, hey, listen, if they're short and they're the ones mining this gold, they know something that we don't know. And so essentially they knew that there was going to be upside, and therefore gold had a gap down. I really wish we could have picked up the GLD. I had a level right here for us to short. It just didn't get tagged, but it was a beautiful, beautiful move down. We are into a little bit of support right here, but honestly, I don't think it's gonna hold very well. If it wants to go higher, it's going to have to go very soon, within the next couple of days. In other words, the longer it bases sideways, the weaker upside is going to be. And again, a lot of it is based on these other things like the dollar, like the VXX, like the markets. And right now, the bulls earned some extra points. So right now we are a little bit on the bullish side. But again, if you go back to the SPY, what did I say? However, we need to take out this 207.24 level. So keep that in mind. For now, that is the game plan. Of course, pay attention to bonds and yields. I think that market is very indicative. So make sure that we continue to see weakness in the bonds like we've been seeing in the last 3 days. And also, especially when you have a down day in the markets, put it in proportion to the VXX, in proportion to bonds, in proportion to gold. If it appears that they're really not catching a bid, even if the market is down, then that ultimately means that the market is just pausing to go higher. Okay, so that's the way I look at it. You have to look at everything. You have to put together the whole picture, and also look at the Russell 2000, because the Russell 2000 is gonna have to catch a bid if this market wants to go higher. And also another thing I wanted to mention, and this is from the weekend video, you probably know this if you watched the video. Based on my work, I had calculated that we are coming into some very important dates. Now I'm not sure how that will play out. Usually these dates tend to give us either a reversal, or they give us some sort of event that is unforeseen, or it might be a new situation that we're not aware of, and it might not even seem like a big deal at that time, might not even make the news, but then in retrospect you notice what was going on. It also can be an increase in momentum, so it can mean a lot of things. So I'm not sure what we're gonna get, but nonetheless, what I have is from February 11th to 12th, meaning tomorrow and the day after tomorrow. There might be something interesting in the markets going on. And it also goes into February the 13th, which, lucky for us, is Friday the 13th. So we'll see what happens. Keep tomorrow and the day after tomorrow in mind, and also be careful with your trades. So sometimes the market can be very unpredictable at that time. So again, a heads up on the 11th and 12th, maybe the 13th. And also, if that doesn't work out, and again, a lot of these calculations have an either or scenario. If that doesn't work out, then February 24th to 28th might be that date. So just put those in your calendar, write them down, and we will see what happens in the markets.